Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I would like to take a look at the Great British Pound instead of the gold market. Well, yesterday we talked a lot about the fundamental background on the European currency, and mostly our report was dedicated to fundamentals rather than the technicals. And the same story currently around the Great British Pound. So I think that in the gold market right now, actually it will be driven by the same factors as we have discussed yesterday. That is driving right now that the Forex market, the same will make impact on the gold. And I just do not want to repeat the same in the two different reports. Besides, on the technical picture we already have discussed on the gold market, we said that the upside continuation right now hardly possible on the gold just because market sensitive are bought on a weekly. In a few weeks market should spend, at least from technical point of view, it should spend in some either flat action or what is more probable in some moderate retracement. So market needs to take some breath before upward continuation. Actually, on Friday on the gold market, we already saw the first signs of this possible retracement that is coming. And we're continuing to watch the gold market in context of this analysis that we have prepared. So nothing really new we could say currently on the gold market. But on the Great British Pound, it's absolutely different sphere. It has its own domestic driving factors that becomes very important, and it has clear and really thrilling setup on the long-term perspective. So as you know, we have the bearish view on the Great British Pound, and we have the long-term target around 113. So it's rather extended compared to current level. But currently, by taking a look at the long-term charts, taking a look at the fundamental factors, we do not see real reasons to change our mind. So we still keep our long-term view. If you do not following the recent events and news in the United Kingdom, so there are actually two major questions. First of all, it's elections in the Conservative Party, and as you know, the Boris Johnson is taking the lead in these elections. And second is the coming elections of the Prime Minister. So, and it's really Boris Johnson really has the best chances to become the Prime Minister, next Prime Minister in the United Kingdom. The elections on the Prime Minister will happen on the July, and if you had not confused something, this 22nd of the July, it will be the date where we know the new Prime Minister in the United Kingdom. So speaking on the personality of the Boris Johnson as the Prime Minister, I would suggest that this is more bearish sign for the Great British Pound. There are two reasons for that. First of all, between the July and October, the deadline of the Brexit, where some agreement could be achieved, and the market and it could be civilized action, civilized leaving of the European Union. So be very few time. So from the July to the October, it's very small time. And Boris Johnson is a very contradictory politician, and I would suggest that it increases the measure of the uncertainty in the perspective of the negotiations with the European Union on the Brexit subject. So, although the politics of the Theresa May was not very popular, but it was clear course in its politics, and she has tried to push them through the parliament till the final moment. And in Boris Johnson, it will be not as straight behavior, I suppose, and it will be more uncertainty in his actions. So it's very contradictory politicians, and that increases risk of the hard Brexit. I will not be surprised if the Boris Johnson actually is the figure of the political forces who stand on the way of the hard Brexit, United Kingdom from the European Union. Besides, there is another risk factor exists, as it will be very small time till the Brexit moment. Boris Johnson could take the self-retirement if he will see that nothing improved in the negotiations, and nobody would like to come on history as the prime minister who failed the Brexit procedure. And if it will be retirement of the prime minister right before the October 31st, so it will be, I don't know, I'm probably not call it as a tragedy, but it will be very, very tricky moment for the United Kingdom and for Great British Pound in particular. So, that being said, in general, this moment, by my view, increases the political risks and will increase the bearish pressure on the Great British Pound. So the downward action probably should continue. That's what about the political part of the overall fundamental situation. Currently, some well-known analysis, for example, the UBS and Nomura Securities, now tells that probably all this stuff already is priced in the market. Well, I do not want to argue with them. So maybe this is correct, but also we have the other side. So actually, this side we have discussed yesterday, and this side is United States dollar, because we trade the Great British Pound to United States dollar, and currently the sentiment around United States dollar is changing. So now, as we talked about it yesterday, we said that market right now is reassessing the attitude to United States dollar, and they think that they a bit overreacted on recent events, and it means that the United States dollar should return back some of its power, and that will make the second source of depression in Great British Pound as well. So taking this all together, we suggest that we probably could stay right now in the moment where the long-term bear trend could continue. The technical picture approximately tells about the same. So take a look at the daily. On the daily, when the rally against the dollar has started last week, especially, it was strong on the gold market, on the euro currency as well, and other currencies also, you could see it. We talked on the Great British Pound on a possible reaction here to the upside, because take a look, guys, we could get the reverse head and shoulders. And it could be also reaction with the trend of the whole market. The Great British Pound could join it and also show at least some moderate, reasonable reaction on the OP target. But, as you can see, this attempt has failed. And in general, reaction on the Great British Pound was significantly weaker compared to all other currencies. So it just tells that the sentiment on the Great British Pound is really negative right now. Here also market has broken through all major fib levels. The theoretical chances exist on getting the double repos, or if we'll take a look, here we do not have close above the 3x3. That was first close, now market is forming the second bottom. But taking it all together, guys, I don't think that we will get the double repo in the current circumstances. I would suggest that we could get the downward continuation. So currently, I do not want to take any long position on the Great British Pound, and probably will search chance to go short. So the next target on the pound will be at the XOP, and it stands in 23.40. Also, for those of you who do not read our weekly reports, this will be also yearly pivot support one. So that's our next destination point, 123.40, 123.30. That will be next target. But also we have more extended targets on the weekly chart, on the monthly. So, but currently we are mostly interested with this destination point. So it means that our context is bearish, and we need to decide where we preliminarily consider the chance to go short. So if we take a look at the 4-hour time frame chart, here you could see that market right now is crushing our head and shoulders setup. That was actually the reason why we have decided to watch for any bullish positions here. So you can see market has tried to move higher, but as I said, reaction on the cable was weakest among all other currencies, and you can see market right now is destroying the setup, dropping below the bottom of the left arm, and it means that market will take it out of this loss. In these circumstances, we need to consider and pay attention to this butterfly, because take a look at 1618 extension of this butterfly also coincides with the same 2430, 2440 area. So that's the target. On the hourly chart, we will use this setup for position taking. So take a look. Market has minor ABCD pattern in place. XOP has been hit. Now we see some minor reaction. So we need to take a look at the retracement. And here we, as usual, will take a look at the possible patterns. So first of all, this could be bread bottom sell, because we have the thrust down here. So it could be bread bottom. Other bullish bearish continuation patterns are also welcome. So it could be garbage triple to sell or something of that sort. So here we will be watching for two levels: 2617, where a bread bottom could be formed, 2640. So that's our primary level to consider, just because it's strong confidence resistance. It's a weekly pivot point. Previous lows also stands here, as you can see. So that's the primary level to watch for. If even you will decide to take the short based on the bread bottom, if it will be formed here from this level, you need to place your first stop above the confidence. So that's important. So from that standpoint, you need to decide by yourself to apply your money management, how you will take your position opening. So whether you will take here a position with a smaller trading volume and placing stop here, or you will be waiting for reaching of the confidence to place tighter stop and taking position with a greater volume. So that's the personal and demands some money management from you. Also, as usual, we will keep an eye also possible this could be ABCD retracement, regardless triple to sell or something of that sort. So we need just retracement to get the more attractive price for taking the position. So that's our view on the British pound. So you can see indeed the overall scenario and overall situation here is very interesting, and it's quite different compared to what we have on the gold, on the euro, and it's definitely is worth of our attention. And let's see what the price action we will get in the next week here.